Hi winners! Look, welcome to Terry's Tips, guys. Get a notebook, get a pen. Today we're talking about 5 steps to help you get up to $150,000, guys, in business working capital. And nugget right here, this is regardless of your personal credit or business credit. So I will actually do my success tip at the end. And guys, my goal in this video is to simplify the process for you so you can actually have results. So we're going to be talking about working capital for business credit through payment processors, specifically PayPal, Stripe, and Square. And this quick nugget right here. I'm an international speaker. So if you want a speaker at your event or a guest for your podcast for financial literacy, generational wealth, personal or business credit, or the aspect of urgency of getting it done right now, I'll put a speaker request form in my description and my pinned comments. You guys can fill that out and I will be there to see you in person. Okay, guys, so let's jump right into this video. So working capital. So real quick, what is working capital? This is business credit. It's unsecured, and that's the beauty of it because it gets direct deposited into your business checking account and you can use it for anything. Marketing, payroll, fixtures, a new office, equipment, software, hiring a video editor, hiring a virtual assistant. So the inventory, so the blessing of working capital specifically through payment processors is that there's no restriction on what you can use the money for. That's why it's so valuable, because of the flexibility. So let's jump into the 5 steps. Step number 1, you must be incorporated. You have to be a legitimate business. You don't have to be a self-employed entrepreneur. You don't have to be in business a million years. You don't have to have, a ton of employees, a ton of locations. No, the goal is to look good on paper, to leverage, to build wealth. That's what this wealth building ministry is about. So looking good on paper means doing a couple of quick, simple steps to make yourself a legitimate, credible, and fundable business. So incorporating your business means that you are an LLC, an S Corp, a C Corp, and I recommend using incorporate.com or InkFile. I think InkFile just recently changed their name to Busy. I'll put the link in the description of this video and in the pinned comments. Guys, you can incorporate yourself, right? Try to figure out yourself. You can hire an attorney, which sometimes can be super expensive, or the online services like incorporate.com and InkFile literally specialize in incorporating businesses all day long, every single state, no matter what kind of business it is. And honestly, it's usually super cheap, right? $500 and under. You don't have to pay the state fees. It can be done not only the right way, but done quickly. So I will put those links in the description of this video. And I also have a whole completely separate video on how to register your business if you're stuck on this step. I don't care, guys, if you have a side hustle. The point of leveraging to build wealth is looking good on paper. So if you're doing something on the side and you have like a 9 to 5, that's okay, right? We're building wealth through multiple streams of income. So to get this working capital, though, because it's business working capital, you have to be a legal entity. So incorporate your business and have an EIN. That's all step number 1. You need your EIN because this is business funding. So your EIN to your business is like your social security number to you. You want the business credit, the business funding to be with your business name and your EIN, not your personal name and your personal social. You guys can get your EIN for free for irs.gov. I'll also put the link to that in the description of this video in the pinned comments. Step number 2 is you must have a business bank account. This is a non-negotiable, period. Now, why? Because if they're giving you $50,000, $100,000, $150,000, guys, they want to be able to put that business money, business funding into your business checking account. So you must have a business checking account. So the reason why you're incorporating and you're doing your EIN in step number 1 is because you're going to need your incorporation documents and your EIN to actually get your business checking account. Guys, you don't have to have a great big account with Chase or American Express or any of the big banks. I actually recommend that you go to a regional bank or you go to like your credit union, because a lot of times they have lower fees. Some of them even have where you only need like $100 or may have even $0. There's different levels of checking accounts, guys. And so regional banks are some examples of them are like PNC, Citizens, KeyBank, Truist, M&T, like any regional bank that's not the great big ones like the Wells Fargo's, the Bank of Americas or the Chases. The reason why the regional banks are super easy is because they usually will give you a business bank account with a lot less paperwork and a lot less fees, and some of them even do not have a minimum balance requirement. So for example, I think Chase, mind you, at the time, I think, okay, because there's different levels of checking accounts, but I've heard that some of the Chase checking accounts require a $2,000 minimum balance. So I don't want that amount, a required amount, to be a barrier for you getting approved for funding that you need to grow your business. So having a business checking account. Step number 3, guys, is you must have a business account with the actual payment processor. So I recommend PayPal, Stripe, and Square. I'm talking about them specifically. Now, why? Because all 3 of them have business working capital up to $150,000. Some even go up to $250,000. But usually the very first time you're getting approved for funding, it will only go up to $150,000. Now, nugget right here. Some of you guys may get less. Some of you guys may get more. But the point is that they have working capital that gets direct deposited into your business checking account, and they do not do a hard inquiry. They're not looking at your personal credit or your business credit. They're looking at your revenue, and I'll talk about that next. So with this step right here, guys, even if you're brand new, I need you to listen to me. Position yourself for success. Position yourself to get the money. Position yourself to leverage that relationship right away. So as soon as you're able to have that business checking account, then you go ahead and set up your PayPal, your Stripe, or your Square. Even if you haven't launched your business, even if you don't have your customers, because let's say it takes you 3 to 6 months to actually launch your business, or to get a couple of customers, or to get everything situated. By the time you actually go and apply for funding, come on, somebody, we teach high-level strategy on this channel, then you'll already have 3 to 6 months of a relationship with that payment processor. Now, I like all 3, and honestly, I use all 3. I use PayPal, Stripe, and Square. What I will say for you, and some of you guys ask me, which one is the best one? I wouldn't say that one is better than the other. I have a cash flowing business, so I use Stripe the most because they give me the best rates and they give me a lot of working capital. However, what I will say is that PayPal has been known to be a little bit more lenient and give some money to newer businesses. So you may only have, a little bit of revenue coming in. You may be a newer business, and PayPal is known to give a good $5,000, $10,000 right away. You get that money, you pay it back responsibly, and then you qualify for more. So all of them work. Guys, pick one, especially if you don't have a whole lot of revenue. You don't want to be spreading your revenue between all 3. Pick one and you use it. So set up a business PayPal, a business Stripe, or a business Square. If you are, and mind you, this video is for all businesses. If you're an entrepreneur, aspiring entrepreneur, have a side hustle, small business owner, investor, this money is for any kind of business. All of you are at different levels. So if you are somebody who's already cash flowing $10, $20, $30, $50,000 a month, which some of you are. Some of you are coaches, some of you are construction companies, some of you guys are investors, and you're already cash flowing that. It's just that you're just going back and learning about business credit and business funding. So if you have high revenue like that, maybe you do get 1 or 2 of them. But in the beginning, pick one, and you want to funnel all of your transactions through one of them because you want them to look at your actual cash flow. Step number 4. And y'all, I need you to hear me on this one. Then if you're going to have a payment processor, you are going to stop using Cash App, stop using Zelle, stop using Venmo, you stop using all those other things to collect money. The whole point, guys, of having a payment processor is so you can accept debit cards, you can accept credit cards, you can send electronic invoices. The goal of business is to have a product or service, come on somebody, that you are giving to your clients, to your base, to your customers in exchange for revenue. We're leveraging our credit to build wealth. So you need to have a way for people to pay you. Stop using Cash App, stop using Zelle, stop using Venmo, and you're now, when you have clients and customers, they're going to be paying you with a credit card or a debit card through your PayPal, through your Stripe, or through your Square. Guys, and when you get whatever one you pick, guys, get familiar with the platform. You can send people payment links, you can send people, you can have funnels that are connected to your Stripe or your PayPal or your Square. You can send people invoices. Sometimes, for example, like with PayPal, you can give them your PayPal information and people can pay you that way. But the whole point of qualifying for this money is that the payment processor is now processing the business transactions for your business, and that also helps you qualify for the funding. Now, nugget right here, guys, and for all my newbies, I drop nuggets through the entire video. For my vets, y'all already know. The 3 C's of business funding, right, are credit, cash flow, and collateral. Write that down. So on this channel, I teach high-level strategy on how to not only build business credit and multiple streams of income in your personal credit, but how to actually leverage it to build wealth. So real quick nugget right here. This is a great time to subscribe and share if that's something you're looking to do. And so the reason why I say that is that I'll have people to say, well, I have a business, but I have bad credit. Well, this type of funding is a workaround because they're not looking at your credit. They're looking at cash flow, which is one of the 3 C's. There are other companies like your business credit cards or our 680 program where they're looking more at your credit and not so much at cash flow. I need y'all to hear me. You do not have to be strong in all 3 areas, but you do need to be strong in one of them. So if you don't have a whole lot of cash flow, you're working on building up your personal and business credit. If you have great credit, but you don't have any cash flow, then you're working on building up your cash flow. Like, it depends on where you are right now. But what you can't do, guys, is have no credit, a bad personal credit, no business credit, no cash flow, no collateral, and then say to a lender, I would like $50,000 unsecured. Y'all, you look high risk to the lender. The lender wants to know, how are you going to pay us back? So when you have good credit, guys, that means that your financial integrity, your business or personal credit says that other lenders have given you money. And so they'll take a risk on giving you money because you've paid other people back, right? If you have cash flow, that says to a lender, okay, well, maybe they don't have the best credit or we're not checking credit at all, but because this business cash flows, come on, somebody, I'm teaching today, because you cash flow, that means you have the means, the financial means to pay the money back. So we'll give you credit based on that. And then collateral, guys, this can be real estate, this can be cars, this could be equipment. There are secured lines of credit, secured loans, secured credit cards. So maybe you're weak on credit, you're weak on cash flow, but your business owns something. I'll link my video on how to buy a car with business credit and working capital, because owning a vehicle in your business name now means that your business has collateral. So sometimes you can leverage collateral to actually get funding. So high level nugget, the 3 C's, credit, cash flow, and collateral. And this video, the payment processors, the working capital, is looking at cash flow. So they're not caring if you have a whole lot of collateral. They're not looking at your credit. So this is a workaround, okay, guys? And step number 5, which is another big one, is grow and launch your business. Guys, if you are a business owner, aspiring entrepreneur, I don't care what level you're at. If you have a side hustle, I'll have people say to me, well, I need business credit because I need cash flow. That makes no sense. You get cash flow from having clients or customers. What you don't want to do is build business credit, get approved for business credit, and never launch your business, never work your business, never scale your business, never scale your side hustle. So now you have a bunch of debt and no cash flow. That's the reverse of what we're doing here. We're leveraging your credit to build wealth. So if you are a personal trainer, you're working on getting clients and customers. If you're an author, you're working on selling books. If you're a virtual assistant, you're working on getting clients and customers. If you are a trainer, if you do hair, you do makeup, if you're a painter, if you rent cars, whatever your business is, guys, step number 5 is to launch and grow and scale your business, because the goal is to get credit that you're reinvesting back into your business, which is going to help your business grow and scale. That way you have the money to pay the credit back. Come on, somebody. And actually a profit, which is how you leverage to build wealth. You're not getting over leveraged. You're actually using your credit in a wise way that's going to scale and launch your business, like coaching, courses, equipment, software, help, funnels, marketing, whatever it is that you need for the kind of business that you have to actually scale. And nugget right here, if you have no idea how to scale or launch your business, then you can invest in a one-on-one coaching session with me directly. It is a higher investment. That's because I am an expert, and people that have invested in these sessions have gotten between 5 and 6 figures in their first 12 months. So that means they get well over the return on investment. So if you're serious about growing and scaling your business, I would be happy to work with you. We start with a one-on-one coaching session, and then you decide how many more you need. Maybe it's once a month, maybe it's once every other month, maybe it's once a month for 6 months. You decide, but the goal is to get information from an expert to actually launch and get 6 figures and above. Got it, good. And for my success tip, guys, we have a 3-step credit framework that is designed to give you success. Let me say it again. 3-step credit framework for success. I have a bunch of different products, right? And I get people to come to me and say, where should I start? Where should I start? It does not matter if it's personal credit or business credit or where you are. This credit framework has already helped thousands of people across the USA. So step number 1 is investing in a credit jumpstart call. That's a one-on-one call with a board certified credit consultant on our team to actually answer your questions, put together a plan for you specifically, and then make sure you're at that 700 and above personal credit scores. Step number 2 is to invest in credit leverage lifestyle. That is an education system, not an online course. This is a framework of information to help you with financial literacy for personal and business credit. Guys, you do not get a bunch of money and then get financially literate. The reverse is actually true. You get financially literate and then building wealth, building legacy, building multiple streams of income, having good personal credit, good business credit are the result of your financial literacy. So Credit Leverage Lifestyle is an online education system. And right now, the day I'm doing this video is actually still 50% off, okay? And then step number 3 is to join our Patreon Wealth Warrior community at the master's level. And I say commit to at least 12 months. That's a community of ongoing resources and support. I do monthly live Q&A, monthly live workshops, and at that master's level, you get access to both of those and the replay. Now, why is this 3-system framework important? The Jumpstart Call is a one-on-one. Credit Leverage Lifestyle is the online education system for you to go back and reference and go through over and over again until you get it. And then number 3 is the community. So a 3-step framework to help you get to your goal. Amen.